Hello, Mavericks. How's it going? This is Roundup. It is May 20th, so let's jump into it. In this session, we're going to go through the news of the day. We're going to talk about what happened. There's not a lot of news, and we are definitely in a consolidation phase. So, whenever we're in a consolidation phase, we always want to be looking to trade less, not more. When we're in a trending phase, we like to trade more, not less.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, so let's get into some of the market numbers here. It was a down day, the first down day in actually the last 7 days. So we broke a 6-day win streak. But look at this, hardly down. We're going to take a look at the charts here, and you're going to see that they were green candles, even though they were a down day today. Russell eked out a small gain. Gold had a nice pop. So gold is kind of back in play here. But there really isn't a lot of news. And that's kind of what I talked about last weekend in the trading room. And I talked about how we're going into this period of time where there's not a lot of news. There's not a lot of things happening. We've had a big run. It's most likely going to be a consolidation phase. And that's what we're seeing here. Since there isn't much news and I'm a little bit of a tech nerd, I want to talk about the quantum computing stocks. This QBTS or D-Wave has been soaring. They just made available to the public a chip that will basically do things that a computer's never been able to do. It's really amazing where we are in technology. Okay, like I said, I'm geeking out a little bit on tech stuff, but let's get into the markets. And you can see that the markets didn't really do anything today. This is an inside candle. It opened up, went down a little bit, came back, closed nearer to the high than the low. So consolidation, we're just seeing consolidation here. We come over here to the Qs, and the Qs look even stronger. Yes, it was a down day, but it's a green candle. There's more buyers and sellers by the end of the day. Everything here is telling you it's consolidation. That's what's happening. Consolidation, we might get a couple more days down, but most of the time, these kind of patterns break to the upside. We look at the heat map, it's just mild red pretty much anywhere. Nothing really big here. This is one of those times in the market. And I always think of August. I used to hate August trading. I used to hate it because it was a slow, methodical grind higher where it just would go like every day up or down 0.2, 0.3%. But then by the end of the week, it was up 1%. And then that's what it was. And it was just this slow grind and there was no excitement. There was no good trends. If you're trying to grab strong trends at the moment, the market's not helping you. You're really having to go do a lot of work to find those individual names. The market's not in an expansion right now. It's in a consolidation. That being said, I said last week, I'm not looking for a lot of new entries this week, but I'm looking to squeeze as much profits as I have out of my long trades. So I think you still want to be long, you still want to be strong. Just, it's not the greatest time in the world to enter some new positions. So, without further ado, let's talk about new positions. Okay, one of the sectors I really liked was the financials. I've been very bullish in the industrials over the past 3 weeks, and this week I said, hey, you know what? I like financials a little bit better than that. This is Bank of America. We've got a nice high base here, beautiful high base. It's just waiting. I like to get into things while they're in high bases. Make sure you give it enough time, and then eventually we're probably going to get a breakout. Target of 47. I think an easy trade here is like a 44, 46. If you're looking for like 1.5 to 1 risk reward. If you're looking for a little bit more risk reward than that, we're in a bullish enough situation where I think you can go 45 to 47. We do have some resistance right around the 47, which is why I like the 46 target a little bit better. So I'm looking at 44, 46. Let's not go all the way up into that resistance area. On the sideways trade, we've got Redfin. Redfin, we've got it, again, not making new highs. It's kind of just struggling here. Moving averages are flat, but we do have a little bit of an up move here. We have moving averages that were flat. They've steepened a little bit. I think this is where a bullish butterfly can come into play really nicely. This probably floats up into this area, this 11 area. I think you can do a 10, 11, 12 butterfly. That's going to put you right in here. The profit window is going to be right up in there. So you are going to need a bullish move, even though it's a little bit of a sideways trade. But if it settles into that area, really nice. Maybe you could even do a little bit wider. If someone said, hey, Rob, I want to do a 9, 10, 11. I want to disagree with that either. It's a little bit more bearish than I would be, but no problem whatsoever on that. I just don't see this thing breaking out to new highs here in the next few weeks. And on the bear side, there was not a lot out there. Not a lot out there at all. This is SM energy. So in the energy sector, what hasn't been a great sector, I can't say this is a great stock chart. You know, we usually like things that are trending. This thing has had a big rally. So I really like shorting after big bear market rallies or bear rallies. We went from 21 to 26. Understand that's like 23%. That's a 23% run. We've given out about 40% of it. I like to get short on these little things. Things are in downtrends, but they have these big rallies. They're usually decent times to get short. So I like this one. Not looking to be too short. 23, 24 is where I'm going to be on a spread. Very, very basic here on that one. Wrapping this up, look, we're in a consolidation phase. Sometimes markets move, sometimes they just don't. However, there is this strong bullishness in this market that's keeping it up and it's pushing it up. It's just not going up very quickly like it was a couple of weeks ago. We have a saying at Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. Just trade the market in front of you and just come to terms that this is where we are. We've had a big run. We're out of a little bit of a gas, but there's still a lot of bullishness underneath this market. So how do you trade that? I think things like a diagonal call spread are a great trade in this environment. I think things like a slightly bullish targeted butterfly make a lot of sense in this environment. Do I like long calls here? No. Do I like aggressive spreads here? Not at all. I think that was 3 weeks ago was great for that. Now I think you just want to be letting off the gas a little bit. Let it consolidate. The longer it consolidates here, the more likely we're going to get a nice extension in a few weeks, and then that will be the time to become much more aggressive and bullish. But until then, I just think it's a mildly bullish market at the moment. We do have a surprising amount of decent earnings reports coming out tomorrow after the bell, so we still have some news, but look, probably not going to move us anywhere. I think the best thing to do is, as I said last weekend in the trading room, I don't love adding on a lot of new longs, but I'm squeezing my bulls for all that they got because it's a good market for that. Thanks for joining me. Goodbye, everyone.